welcome back to the channel. We got the Qs here, right? Trying to get above VWAP. The Qs trying to climb their way above VWAP. We are going to hit the macro data, the technicals. We're going to do Q&A. We'll do some debates if you guys want. If you want to jump in, you want to challenge me, we can do that. But I think today's a down day. I think we get a down day today. Obviously, the day's already almost over. But we called this yesterday, right? The market is up a lot. It needs to breathe. Maybe this was the breathing room. We get a reverse head and shoulders here. It looks like the market wants to go higher at the end of the day. We'll see. That's your reverse head and shoulders, but it's just intraday. That doesn't mean much. Let's go ahead and turn it to what we saw today. What are we seeing today? Yes, sir. It's about that time. I just want to mention this as we're looking at the market here. I'm going to pull this and I'll pull this on this side as we're watching that. This is what we're seeing. This is what we're seeing for the market over the next, I think, until we hit Christmas, is a melt up, a stock market melt up. What do I mean by that? I think that there's going to be a lot of performance chasing here, right? I've read some research. I do the research. I look at what people have to say. We're seeing the price action match this, but a lot of performance chasing from these fund managers, right? Who are they going to chase? The leaders, mostly the Magnificent Seven. We're seeing Tesla run up sharply, and well, also a lot of catch-up trades. So catch-up trades as in all the laggards, right? IWM, a lot of the small caps start to catch up. Also FOMO into riskier assets like Bitcoin, like Ethereum, like Chainlink, like maybe not XRP, but in general, risk assets like Tesla, you're seeing that catch-up trade start to play its way out. And a lot of this is stemming from the deterioration, right? The deterioration of the risks, of the macro risks. And the biggest risks this year were inflation. It's going to come back, right? We're going to reemerge. Inflation's coming back. There's going to be a recession. No, both of those fears are gone. Are they gone forever? No. But as of now, inflation risks are lower. We're going to go over that data right after I'm done talking about this. And we're going to hit the recession data also. There is no recession anytime soon, right? Maybe next year. We'll see. But until then, the market's going to rally. It should continue to rally, to melt up, to squeeze the shorts, bring in new longs for the breakout. The NASDAQ is at a breakout point right now. Okay. And another part of this, I like to call these the macro forces. And we're going to go over these macro forces. It is bond yields, the dollar, oil, commodities in general. And bond yields have peaked. That helps out stock market valuations, right? The dollar has peaked. It's rolling over. Oil is tame. Okay, oil is pretty tame. The war is not making oil expectations go up because it's not expanding to the degree that the fears were. So these fears are falling apart, right? Corporate credit is catching a bid. Corporate credit is catching a bid. What does that mean? That means that investors are confident about stocks going higher, about equities going higher. And you do have robust earnings. I think this is what's driving the rally, is that earnings are coming in pretty robust. Yes, revenues have decreased, but the expectations for the third quarter beat. Profit margins are moving up while producer prices are coming down, right? So what else can you ask for? What else can you ask for here? This is why the market is rallying. It's going to breathe, right? It should pull back. I think we pull back on Friday. I think there's going to be a sell-off on Friday if we keep this up, because the market is up a lot. But this market is going higher, possibly to all-time highs by the end of the year. I think the Qs definitely go there. So let's dive into that macro data. All right, let's do this. You guys see it? I'm going to pull it up here for you guys on TikTok. Again, if you want your comments to get read for sure, jump over to the YouTube, post them on YouTube, and then you can jump back to TikTok or wherever you are, and then we'll hit your comments. Other than that, you're taking a risk of your comments not being read or your questions because of the feed. Let's go ahead and start off with the recession fears, right? GDP. Well, GDP in the third quarter, right, which was July, August, September, that actually came out way stronger than expected. This fourth quarter is actually lower, which stocks like, because that means slower inflation, right? Now, we just got an update from GDP today. The Atlanta Fed, right? They come out with a GDP forecast every single week. And what they're saying is GDP, they revised it from, so last quarter was, let's just give you some context, was 4.9%. This quarter, this is why yields came down. Also, bond yields came down. This is why rates are down. This is why the Fed is done hiking. The fourth quarter GDP expectations came down to 2.1%. But today they revised that to 2.2%. So does it mean growth is roaring back? No, it doesn't. But what it does mean is that growth is not accelerating at a high pace where inflation would accelerate at the same time. We're not getting that. So inflation expectations are lower, but growth is also not falling negative. It's also not going negative. So this is the perfect scenario for stocks to bounce, right? Perfect scenario. You get the dollar, after this report, I think it was earlier this morning. There's other factors. The dollar bounced a little bit, rates bounced a little bit. And when you get the dollar up, the macro force, right? The rates up, then you see then the market kind of slows. So there's no sign of a deteriorating fourth quarter, not here yet. Despite that, I see all the debt worries and all that, but those are signs. You keep those in mind, but they're not really materializing at the moment. Okay, now consumers. Let's go to the consumer. We got retail sales today also. So retail sales, what do we see on retail sales? Today we got retail sales. The month on month retail sales data showed negative, right? We went negative on retail sales month over month. The expectation was actually lower, so this actually beat expectations, not as bad, but it is negative. And that's good actually for the market because we've been accelerating. We've been kind of hot, so now we're cooling, right? We're cooling a little bit, but the year over year data, it's pretty clear the year over year is still positive, right? We're still expanding. Consumer spending, the trend is still expansionary. Okay. Just because you slow for a month doesn't mean everything is falling apart. When we go negative on the year on year, that's probably a sign that the bigger trend is starting to slow. Maybe we get that next year. But for now, over the next 3 quarters, we're not seeing signs of that. So the consumer is slowing. Perfect scenario for the Fed, perfect scenario for the stock market because we know profit margins are rising while rates are falling and while inflation is falling. Oh, inflation isn't falling. Okay, well, let's move over to inflation. We got producer prices here. Producer prices, these are the input prices for obviously for manufacturers, for services, that type of economy. For companies, right? Month on month, the month on month producer prices came in low. I guess it's kind of hard to see in here. Let me try to zoom in a little bit. They came in at 0%. And you add this from yesterday, you're getting 0% inflation. Inflation expectations are dropping to the downside. They're falling to the downside. So this is better for the market. The market loves it. Now it's not up today because it's already made a sharp run, but this will filter in, right? And you're going to get more buying year-end rally. Producer prices are lower. Simply, I think the biggest component is not only is consumption falling, right? But also disinflation, you're getting consumption fall, but you're also seeing that oil prices are dragging down the inflation pressures, right? So that's producer prices month on month. If you go to the year on year for just headline, including energy, those were also lower than expected. So you're just getting lower producer prices, lower than expected, very bullish for the market because that means profit margins are going to increase going forward. This is future growth for profit, right? Not revenues, but how much you can retain. You go to the core side, which everybody's worried about, it was zero. It was zero. Year on year was 2.7, I'm sorry, 2.4%. So that even undershot expectations. So hey, producer prices are lower, input prices are lower, very bullish for profit margins going forward. Um, and then this is important too, right? So growth is picking up. We're gonna go over those macro forces. This is China's retail sales. This actually went under the hood yesterday. China's retail sales have been up for about what 4 months in a row, 3 or 4 months in a row. So China, China's global growth is set to start picking up. They've been stimulating, boosting. Their I know their savings rate was very elevated because they were worried. A lot of the people are worried, are not people, but a lot of the consumers are worried they don't have a healthcare system, so they're saving more money. But they just had the annual festival where they spend the most money. See if we can get to it. Here it is right here. The Global Times, right? Well, not Global Times. China's consumer spending roars back. First post-COVID double-digit shopping festival, right? They exploded in they just have a festival where they spend a lot of money, right? I don't know how it's some type of cultural thing. Either way, China's growth is back. China is back. Is now you can say, it's not back yet. Sure, but global liquidity is up. So we're seeing the major central banks year on year money growth, right? Or the total assets, the liquidity they're injecting to the market. We're at the market low. We're at the cycle low. This is why crypto is exploding because crypto moves off of liquidity. It moves off of not just M2 or M1, but also capital liquidity, which you don't see. If bond yields come down, you have more credit, you have more collateral, you have more liquidity. So also China's printing, Japan has been printing, right? The ECB pretty much done hiking. The rate cycle is over for global central banks. You might see a little hike there, here or there, but they're starting to turn. And this is very bullish for the market also. And the biggest risks to this movement in the macro is going to be a recession. But we all know the Fed can step in. The Fed has stepped in, and they will likely continue to step in. Okay, we'll go over chain link too at the end of this, but let's go to the macro forces. Okay, let's see how the market is actually changing. We're looking at the Qs here, right? Qs. I think I don't know if we get past VWAP, right, on the daily, or not daily, intraday. We might not get past VWAP. That's totally fine. I don't expect us to get past VWAP because we've been up tremendously. Go to the 30-minute chart. I mean, we had a big upside move the past the past like 4 days, but yesterday was huge. So we consolidate. Maybe tomorrow morning we move up again. Now tomorrow's going to be interesting because we get existing home sales, I believe, and if those come out weak, bond yields should fall, and we should see the market move higher. But let's go ahead and look at the macro forces to keep this insane. Now I'm keeping track of Tesla. Tesla has been ripping, right? Oh, I missed that. Let me put the banner on. Messed that one up. Oh, well, I'll just put this on right now. Producer prices, retail sales. That's what we should have. I forgot to put the banner up. What a newbie. Either way, thoughts. Actually, these are the macro forces. We'll look at the macro forces here. Okay, this is the bread and butter to the market. This is why we called the bottom. Okay, the dollar had a little bounce today, small bounce in the dollar, which was, it's not that big, but the dollar is probably going to roll over. Now, I had somebody on the stream yesterday say the dollar has nothing to do with the S&P 500. You're badly mistaken, man, right? Guy, dude. I don't want to offend you too hard because, I got to tone it down a little bit. That's what my producer said. But the dollar is about 80% correlated, inversely correlated with risk assets. When the dollar goes up, risk assets come down. When the dollar goes down, risk assets start to bid, right? So that's an 80% correlation. Okay, maybe it's 79.8. Either way, the dollar is falling. And once you get under this level, we still have we have a ways to go. Then that's really going to be set off by the dollar probably doesn't drop till the Fed cuts rates in 2024, which we're getting closer to that actually happening. And then if we move over to yields, right? This is this is going to keep the bulls going here is bond yields, right? As long as we see growth, what do we see? Retail sales are negative. We saw producer prices, which is inflation, negative or going to zero. These yields are now easing, right? Bond vigilantes are not shorting the bond market anymore. As a matter of fact, they're probably getting long bonds. So we expect bonds to roll over. You see the pattern playing its way out. And I know somebody said also, just to inform you guys, you can't draw a pattern on rates. Well, if you understood the rate, you got to think this is a reflection of bonds, literally the inverse reflection of bonds. So if you're seeing a head and shoulders, that means the inverse is reverse head and shoulders on the long bonds, which a proxy you can use is TLT, which is why we have TLT, right? Has it broken out yet? You could argue it's breaking out to some degree, but either way, the fundamentals of bonds, right? There's a record inflow of bonds. And if you do believe the recession, which a lot of people buy into it, which is fine, we could go into recession. Either way, growth slowing puts a bid in the bond market, right? We pretty much peaked when the war started because there was a flight to safety into U.S. Treasuries, which we haven't seen these high of rates or yields on the U.S. Treasuries on the 10-year anyways for 10 years. So it's a really good risk reward. So I think rates have peaked. And if rates have peaked, the further they fall, even if earnings don't grow, check this out. If earnings don't grow, please don't turn it down. I don't know what you're talking about. Freedom. Oh, okay. I see what you're saying. If earnings don't grow, let's say earnings stay sideways, right? Well, as long as yields fall, that's going to pump earnings because this 10-year yield determines how you it's almost like a tax, right? If the tax falls, you keep more money, right? So stocks will rise as this falls. Now, does it fall sharply? I don't know. It could come right back up, could just move sideways, but the peak is in. The Fed is done hiking, growth is slowing. That is bull case. That is a bull case for stocks unless growth collapses, but we're not seeing that. We're not seeing any collapse in growth. We just saw the Fed now GDP got revised up 1/10 of a point. Not much, but it's not falling. It's not rolling over, right? And then plus you got fiscal policy coming in Q1. So keep that in mind, right? Looking at the rest of it, look at the VIX. The VIX is right back to bull market levels under 15, right? Last time we got here, we stayed here for a while. Everybody was like, "I'm ready for the for the bounce," but the VIX, it's not really, the VIX isn't like, it's not a stock. It's all about risk, and the risks are leaving. We just said the inflation risks are lower. That's what's fueling this bull market, and the recession risks are much lower. This is what's fueling the bull market. So you're going to have big swings as long as it stays here. I mean, stocks are going to perform, and I think crypto, as I've been saying all year, outperforms the stock market also. Okay, these are triple B spreads. You want to see where the risk is really at. When this thing goes higher, that is signaling corporate risk. That is signaling corporate risk. If it does spike, then this is going to reflect, oh my gosh, there's a recession definitely coming, or the recession is happening today. Unemployment is spiking, whatever it is, growth is falling apart, and you're really, when this goes up, you're ditching corporate debt or corporate bonds, corporate credit, and you're going into treasury credit, because obviously you're going to get a yield. There's no risk there, right? So it's falling, which tells you that people are actually taking risk in corporate bonds in corporations, right? Probably buying Apple debt, who knows? But that's happening. HYG, this is another thing you can look at. Basically high yield corporate debt. We won't go too much into this, but let's see, Nasdaq volatility finally coming down. Gold, hey, gold should actually perform here. I think gold's going to do well. It's not going to do as good as crypto is. We talked about that yesterday, but gold should do well. Sector to sector, we haven't really looked at sector to sector, but KRE is that a regional banking sector, regional banking risks. I know people say commercial real estate is at risk, but we're not seeing it. If this would be signaling, this would be really getting crushed if that was the case. And I think the Fed really is just the FDIC, they're on top of it. They're on top of all these commercial real estate risks. There has to be a surprise. If we do see a surprise, for sure, things could turn negative. But right now, the surprises are more so people are covering to get long, right? They are covering to actually get long. So technical wise, right? We went over that. Let's go ahead and set the technicals. If you guys got questions, we'll do the questions too. I just want to hit usually you guys ask the technical questions on here. Okay, Tesla's at that top. Oops. Tesla's at the top of the grid right now. The top of the range. So, yo, do I not know how to use this? Let's just go. All right. So Tesla's at the top of the range, right? This downtrend. Um, I'll tell you what I did. I actually got short today, Tesla. I have long calls. I was up on those calls. I can actually show you if you guys want. If not, I don't really like to show it I don't really want to show it online. It's kind of weird. But if you think I'm full of it, so I shorted at 242 into Friday, right? I think we have a pullback into Friday. That contract ends, and I'm still long. I'm still long Tesla. Anyways, yeah, Tesla had the gap up. We did see the reverse head and shoulder. So if you guys are new or you don't believe in patterns, well, we called out this pattern. We said, hey, we should have a reverse head and shoulders. This is a bullish pattern. Okay. It started to set up and it broke out. It broke out on a gap up too. When you gap up, that's real strength. We could just keep chugging along here, but I think it's going to come down to the overall market. The reason I got short was because the Qs are very overextended, and I expect a pullback before we break out to new highs on the year. Right? We are headed for new highs on the year. We're really close to all-time highs. We're really close to all-time highs. This is the breakout zone. The Qs might do it on Friday. Maybe we it comes on Friday. If yields keep dropping, we probably do see that. So we'll see how that plays out. All right. Target, your macro analysis on yields, oil, dollar helped me make some bread yesterday. Appreciate you, King. 100% Jet. I'm glad I can contribute. Those are just the macro forces, and they do tell you a lot. Like nobody knows the future, but the macro always signals, hey, something is coming, right? Because this is like all the macro together. You add it together, and it's like a big wave. When things move, things move. S&P is really trying to get above this next level. We'll see if it actually plays out. What up, Hassan? How was the report? Just missed the beginning of the show. I mean, you can rewind, you can go back, or just ask your normal questions, Hassan. If you guys want your comments or questions answered, just jump over to the YouTube stream, and I'll answer them on there so they don't get lost in the TikTok feed. Okay. Let's go. Let's take a look at the SPY right now. It looks like it could be reversing. You see that daily candle looks like a reversal a little bit. Could be reversing here. I actually hope we do reverse. It'll be a little more healthier, I believe. I think it's going to be healthier if we get a little reversal. What up? Yeah, 100%. Um, check out Wire or TJX. Loving the profits. Exxon Mobil. Okay, you guys are ready to go through it. Do you think the Chainlink pullback is over? Okay, yeah, let's talk about Chainlink. Again, if you guys want, look, I'm gonna just put it this way. If you guys want me to do a ticker on TikTok, you want me to look at your ticker, jump over to YouTube, put the ticker in the comments so it sticks. Okay, I say this all the time. I know you guys might be new. Throw your ticker in the comment. You can jump back to TikTok. And actually, you can see the charts way better on YouTube anyway. It's a trick to get you to subscribe. Okay, it is a trick, but it's not a trick because I'm telling you, right? Either way, it's just easier. It's easier. It makes the show a little more efficient. Okay, versus me having to scroll and get lost on the TikTok feed. All right, so throw your tickers on there if you guys want me to look at it. I'm just gonna say that for now. Throw your tickers on there, and I'm way more likely to read your comments. So let's go ahead and hit yeah, let's do the technical. So Chainlink, is it gonna have a pullback? I'm watching Chainlink on here. Look at that. That looks good. The cues look like they're really starting to set up. I like that. The cues are setting up. I mean, it's a pullback, but you see the dip. You see the dips getting bought. That big candle is showing you that. All right. Switch to the macro or switch to the crypto really quick. Man, Bitcoin is pushing though. Boy, Bitcoin is pushing, chugging along here. A lot of liquidity coming in. Like it has that sell off. It's ripping higher. Bitcoin looks solid. Obviously, Bitcoin's the big signal here. Okay, Bitcoin is the big signal. It is moving higher. Ethereum, man, Ethereum has been lagging a little bit, right? You always have formed that channel and then it broke down. Ethereum is lagging. Look, Ethereum doesn't have really how do I say it? It doesn't have the best patterns, but it does break out at weird moments. So Chainlink, yeah, it pulled back, and I know everybody's like, "Oh my god, listen, crypto trades much different than stocks. They exaggerate to the downside, and if it has a real bid, it's not going to drop as much as you think it is." So I grabbed some at 14, I grabbed some at 13, but dang, this thing doesn't want to slow down, and I'm going to tell you why fundamentally because we don't just talk about pure technicals. Shout out to the people who are great at technicals. I know my technicals, but I am not the number one technical guy. I more so bring you more context, which is going to be macro. We went over that, and also fundamentals. And let's talk about the fundamentals of Chainlink because I know you guys are waiting for a dip. What up? What up, Tigger Media? Thanks for all the insight. Hey, thank you guys for for staying tuned. So, and this you guys know, I'm going to be honest with you guys. You grab some link at 1410, nice. I'm always going to be honest with you guys. I'm very hood with okay, I thought you said hood. Look at here's the thing about Chainlink. I'm going to pull this over to I think I just retweeted this. And this is something that you guys are going to remember me for talking about Chainlink over and over and over. And I've been telling you guys this, right? It's gonna break out. It's a monster, and part of that is right here. DTC, not just DTCC, but where's the beginning? Let's see. Well, we'll just look at it this way. Um, they've integrated with Swift, okay, the biggest messaging platform, and DTCC, which is basically the depository trust. Uh, let's just put it this way: DTCC settles all transactions, right? They're a Federal Reserve entity. They settle all transactions from equities, from fixed income, whatever it is, commodities, US dollars, currencies. They settle everything. Okay. And what are they doing? They're integrating with Chainlink. They're using Chainlink CCIP. As this becomes more successful, this isn't the best like visual. I was trying to find a better visual. Huh, I guess I don't have it on here. Oh man, I can't show that. That guy is funny though. Fishy Catfish. He has a lot of good stuff. Anyways, DTCC, right? They are transacting for not billions. They're transacting quadrillions of dollars every year. Last year they did 2 quadrillion. They're due to do 4 quadrillion. Chainlink is their CCIP network is going to take a small piece of revenue from every transaction. So just think about $4 quadrillion, and Chainlink CCIP network picks up a little bit of that. That is huge revenues, right? If they, let's say Chainlink takes every 4 or 5 quadrillion dollars of revenue, a percentage of that, a small, less than 1%, you're talking hundreds of billions of dollars. You're talking about revenues the size of Apple. Okay, revenues the size of Apple. And am I being exaggerative? No, I'm not. If it works that way, either way, even if it's $10 billion of revenue, it's huge. The coin is only $10 billion market cap, not even that. So it's very small compared to the use case, compared to the size it can become. So that's why Chainlink is going higher, because it's nothing like the other cryptos. It is nothing like the other cryptos. It's oh, here it is. Here's what I want to show. So they're integrating with BNP Paribas, right? This is to tokenize all assets on chain. ANZ, this is a Australian bank, I believe. They're tokenizing their assets. They're using Chainlink. Citibank's already done it. In order to tokenize your assets, you need the Chainlink is the only network that can do this. It is the only network, the only infrastructure that can tokenize real world assets, right? So you see all the entities there that are doing that. And Chainlink, God follow that guy. He's probably the best. Him and Fishy Catfish. He says Chainlink is the only protocol that meets both the interoperability and data connectivity requirements of tokenized real world assets. So JP Morgan's doing it, right? Swift's doing it. DTCC, every bank, we're all headed to a real, who is it? BlackRock. We're all headed, not all of us. I mean, like every central bank is headed for a tokenized world where real world assets are tokenized. And there's only one protocol that does that. It's this coin. It is this coin right here. Best fundamentals in the entire, outside of Bitcoin and Ethereum, the number one fundamentals, right? So I'm just going to keep knocking on it. We are buying back here at $5. We told you guys about it. It's hard to believe until you see the price move. I made a video right here. I said why I'm buying Chainlink at $5, and you can go look. And man, we're up 200 something percent. So, and it still has a long way to go. I mean, I think it still has a long way to go. The bull market just started. This is wave one of the bull market. Wave one. So you're the one that introduced you. Yeah. And shout out to my brother, Isaiah Fielder. He's the one that understands how this works. I'm just the reporter. I find the best assets, but he knows how to interpret them. He's the one, if you want to ask him, his name is Isaiah. He's the one that actually understands exactly how these networks work, because it's hard to interpret this data. Anyways, what's up? How you guys doing? Exxon Mobil. Oh, like I said, jump over if you want me to do. If you guys want me to do TA, jump over to YouTube. You want me to do the technical analysis? Jump to YouTube, put in your ticker, and then you can come back or do whatever you need to do. Oh, you said you believe Big Man's coming? Yeah, yeah. Shout out. Yeah, Big Man's coming 100%, bro. That's where I'm at. Exxon Mobil. If you want me to look at Exxon Mobil, jump over to YouTube, put it in the comments, and then I'll look it over. You made a lot of money on Bitcoin. Grayscale offers G-Link. Yeah, the Grayscale. So the Grayscale Trust, they have a Chainlink, and that thing's at like $40 because there's so much institutional demand. But the thing is, they can't buy this on the crypto network. They need to buy it through a trust or through an ETF. There just isn't an ETF. So imagine if there's an ETF, you get a lot of liquidity coming in. You have a lot of liquidity coming in. Anyways, yeah, I'll answer your guys' questions if you have them. If not, that's fine. We'll just go ahead and do some more technicals. I think we are still in the accumulation phase. Yeah, we're still in the accumulation phase. Bull market has started 100%. Yeah, crypto bull market has started. I mean, it's pretty obvious, right? Look at that candle on Bitcoin. Holy smokes. The people are just going to front run this. Also, so Coinbase right now is like the biggest, I think, other than Binance, is the biggest broker for crypto. And I think there might be a buy the new, sell the fact. Like they're what is it, in 6 days? A lot of people, so they opened up this program where you could borrow crypto, you could borrow Bitcoins, right? And they basically you paid a monthly fee, and you could borrow up to X amount of crypto. So if you had one Bitcoin, you could borrow a third of that Bitcoin. So you have 1.3 Bitcoins, right? That program ends, I believe, the November 21st. Okay, November 21st. I did it for a while. I borrowed crypto for a while, then I sold it. I was like, "No, I'm not holding this no more. We're in a bear market." And, that ends. So when that ends, there could be a sell-off. I don't know if it goes all the way down, though. There's just not a whole lot of sellers. More people accumulating. Also, when the ETF comes in, depending on how far price moves, if we see price spike into the ETF and then it gets released, you could get a sell-off also. The thing is, I don't think it really falls that much. We're not going back down here. You need a macro event. You need a nasty macro event to really come back down here. So there's going to be some opportunities, but I'd say probabilistic wise, it's just going to keep going higher. It's probably just going to keep grinding its way higher. The supply is down. Here you go. You got this flag setting up near here. Chainlink is just moving. So you have a lot of good stuff setting up. I think we are still in accumulation phase compared to Binance. The Coinbase volume is nothing. Yeah. Oh, okay. So Binance, yeah, Binance has all the volume. Yeah, Binance has all the volume. Binance is interesting, man. Binance is interesting. We'll see how things play out. It's good to have some. It's good to definitely have competition, though. All right. So let's see. Is Spy starting to lift? No, it isn't. So we're starting to get that sell off into the close. Let's go right here. Actually, I'm gonna go on this one. We'll do it right here. Let's see where Tesla's at. We'll do some technicals. All right. We'll do some Q&A. Let's do some Q&A. I'll be right back. We'll start some Q&A, and then I'm going to just look through some technicals. I'll show you guys what I'm looking at for tomorrow, the rest of the week. All right. See what we got here. It's crazy how much crypto has moved, and we're still 5 minutes before the halving. Yeah, yeah, it's explosive, man. It's explosive. It's a monetary inflation asset. So crypto goes higher when it believes or when there's more liquidity to come into the market. When the market we're getting close to more liquidity. Everybody wants to wait for the liquidity to come, but it usually front runs the liquidity. It doesn't wait for the liquidity to come. Markets are forward looking. I think that's where people make a mistake. They want to wait for rate cuts to come, but typically rate cuts or even the pause is very bullish because it means more liquidity. It means that if interest rates even fall a little bit, that increases the amount of lending. And so that's probably why you're going to see that. Well, looking at Tesla, we'll go ahead and look at Tesla then here intraday. Let's see. You can see the EMA. So right here, I have the 9 EMA crossing above the 21 EMA, right? It's starting to cross. So that's very bullish momentum for Tesla. It's been stronger than the overall market. I think like the past 3 days, it's been exceptionally stronger than the overall market for the first time in a while. For the first time in a while, couple catalysts there. Um, so yeah, I thought we'd fill that gap. Let's see if we reverse here. We got 250 is probably that next resistance, about 250, I'm thinking. But we did fill this gap. This is the trend. It's been respecting the trend pretty pretty consistently. You can see right there. This was what? This was the run up into 300 before they realize margins have not bottomed yet. And they are doing price increases in China, and that's what investors, Wall Street was worried about. Don't know what that is. Man, Tesla might just break out. I thought it would have already dropped. It's just not dropping. Also, what happened to my RSI? For some reason, RSI dropped out. Let me throw that in. Oh, I see. Okay. I should roll over. The RSI is saying it should roll over. I'm actually hoping for a pullback here. Say Binance has 6 times more volume than Coinbase. That's crazy. A lot of trading taking place. I think too, the US has a lot of tax regulations that maybe China doesn't have, where you get taxed for everything in the US, not as much in China. Would you say, big man, that SQ did pretty well? Yeah, it did pretty well. So that's moving up. Now let's look at S&P. I think we've I'm not even going to say on a technical basis that the S&P should drop. I just think it's over. Well, yeah, I guess it is kind of technical. I think we're just up too much. See what you have to say here. Carbides. If I could buy a call option for every time your RSI indicator disappears from your trading view layout, I'd be rich. Yeah, bro. I don't know why it disappears like that. I was on my phone earlier and it just what you know how you double click to get it back and then get it like it just wasn't working. The double click didn't work. I don't know. I swear there's always glitches with my stuff. Just like the Apple update basically eliminated my camera from working anymore. So I had to go get a webcam. Yeah, you get taxed for everything in the US. There's always a trade-off, right, for whoever you're with. I don't do Elliott waves, sorry. I'm not a Elliott wave Elliott wave person. I'm sure there's somebody that can do Elliott wave, but I don't do Elliott wave. So, yeah, S&P, little overbought, um, coming down a little bit, but this might be enough consolidation for it to go higher, Thursday or Friday. I don't really want it to. I want it to keep cooling off. Let's see, where's that RSI? Yeah, it's getting hot. It's getting hot. Let's go to the 4 hour. 4 hour RSI, pretty much overdone. Let's look at it on this one. Yeah, that's elevated. This is why I shorted Tesla. I like to look at the overall market. I definitely like to look at the overall market, and you can see the 4 hour RSI is like, what do we at? 78. So it just like a rule of thumb, the more overextended a stock is in one direction or another. For example, today it's the upside direction. The more overweight in the short term, the more overweight a lot of traders or swing traders or investors are, the more sensitive the price is going to be to a negative surprise. When you're down here, negative surprises aren't too bad because it's already priced in, but this is not priced in anything too significant. So that's why I think, hey, it's more likely we pull back into Friday. Maybe we don't. Maybe it's just too much momentum. You have the same problem with your tablet. Somehow it loads an old layout, so I have to save it to my yeah. Yeah, it's weird. It's interesting, the world of I talked to this guy, he actually does a lot of the information for markets, and he said that most of the data software is on not on Macs, it's on the legacy system in the 90s, he said, was built off of Windows. So Macs have a hard time, or I guess iOS, whatever it is, Apple products have a hard time integrating with a lot of products, which is unfortunate, but it is what it is. Brandon says our salary is taxed, and if we want to build a house, every single material components is taxed after we're taxed. Yeah, bro, we need lower taxes. I don't know if Josh is on here. You on here, Josh? We gotta have that tax talk, bro. We gotta have that tax talk. We're taxed way too much. If there was less taxes, I think we'd generate way more GDP. Because the truth is, all that tax money, where the hell is it going? We don't know. It's going to places that we don't agree with. So we should be taxed less. And there needs to be really a blockchain where we can choose what we pay for. Like, let's say you have to pay 20% tax. Great. But I'm gonna choose on the blockchain exactly how I'm gonna get taxed. I want to choose what I push that money towards. So you actually get the people voting for what get taxed, right? Roads, police officers, whatever it is, schools, education. That's how it should be. I think blockchain is going to bring that to us, and I think it's going to be Chainlink that brings us that to some degree. So yeah, S&P looks definitely overbought. Um, let's see the Qs, pretty much the Qs too. We could come back and fill this gap. I know somebody mentioned that right now. What? No, I don't think so. So yeah, here's the gap also. We come back to 377. That's a real possibility. We either stay at the top of this gap or we fill the gap. Not sure. Would you say, Hassan? Do we get taxed for our tax returns? Yeah, you even get taxed on your tax returns. It's insane, right? They charge you to do a tax return. I think Fed now is going to change that though. They're going to come up with a way to make it more efficient. If you gift money, the person receiving the money needs to pay taxes on it, even though you already paid taxes on that gifted money when you earned it. Taxes are scams. Tax is a scam. I wouldn't say the whole tax system is a scam, but most of it is. Oh, okay. Shout out to you, Tigger Media. I'm glad you're able to that was useful information for you, man. I'm glad. That's my let me see. I don't want to say my strategy because there's a lot of stuff with it, but my style is I want to see things extremely oversold, but I want to also add more variables because it could be, the market could just go lower. I want to see it oversold, and I want to see that investors are positioned way too negative for sentiment and positioning. And I want to see the macro, not want to see, but like I'm keeping track of the macro so I kind of know this isn't as bad as people think it is. There's going to be a bounce for sure. There's always a covering, but is there enough positive or is there enough expectations not being met where this rally where the bounce turns into a rally? Same thing for the upside. It's just harder for me to short something than it is because it's harder to short. The market can just keep going higher. It doesn't go lower over time, it goes higher. So it's harder to short, and I think we're at that extended, area, but this is not, advocation to short anything for sure. What indicators do you see on your technicals looking at the charts of what indicators do you use in your technicals when looking at the chart of a stock? You talk about the RSI, the 200, the 50-day moving average. Are those the only indicators you use? When I'm looking at a chart, for instance, I'll use Tesla. Tesla's like a prime example. I'm looking at, that's a really good question. So I'm looking at RSI, right? I'm looking at buying pressure, selling pressure, basically overextensions, right? To the upside, to the downside. This would be when I see this, I'm interested. I'm interested, right? I see this, I'm interested. Not even the moving average so much. I'm interested when I see this. I want to see a pattern form also. This is like a literally free technicals for you guys. I want to see a pattern form too. So what pattern did I see into this overextension? Reverse head and shoulders. So now I'm very interested because there's a reverse head and shoulders forming a bullish pattern And now I want to see bullish divergence. What that is, and what that means is you're seeing the RSI start to turn the other way, like a rubber band. And is the price turning the other way? Well, you can see here that price is falling. Okay, you see the price falling here. And as price falls, and that same point with the RSI, it's moving sideways. RSI is no longer moving lower. So that's a bullish divergence. It's not the best bullish divergence, but it is bullish divergence. And then all of a sudden you start to get that pattern. RSI keeps climbing. And so I know it doesn't mean the stock will go up. It really doesn't. It just means there's a bigger probability that this thing, the pressure really starts to go and to the upside. It's like holding a beach ball underwater. I always say you hold a ball underwater. Well, you can only push it so far before, it takes more effort to push it down than it does to lift it up, right? The further you go down, the harder it is to push it down. You pull it off a little bit, it wants to explode. So you got that there, you saw that pattern. And I know you talk about the moving averages. It's not even the 50, the 100. It's really you could do any moving average. What you want to see is the lower time frame moving average cross above the higher time frame moving average. Okay? That's to hold the momentum. That's not necessarily to enter. You can't enter that. A lot of people enter that like I know this is a lot of stuff on the screen. Let me try to simplify it. Let me turn these gaps off also, right? So I think the 50, the green is the 50-day moving average, right? I want to see that start to cross the blue. That's more confirmation. Crosses the red, more confirmation. So that's bullish, but I don't want to buy a breakout. You would have got, stopped out right there. I want to see price spike back into the moving averages after I see a golden cross. So golden cross is lower time frame moving average crosses above a higher time frame, right? That's hard. I know it's really hard to see. Let me see. See if I can fix this up really quick. Little teaching moment. So lower time frame is your green, crosses above the bigger time frame, golden cross. Okay, it crosses the 200, another golden cross. But I'm not looking for a breakout. I'm looking for price to pull back in and show support after the momentum's already shown me that it's ready to go higher. So you get the pull in, and this is going to shake a lot of people out, but really it's just the support from the last breakout, really, right? That's all it is. You're getting support from the last breakout. It's just really tricky intraday. And then boom, you start to move up again. So I think that's what we saw last time. And are we getting that today? Let's fast forward it. I think you saw that here too, right? There wasn't a cup and handle though. It was just super extremely oversold. You got the bounce, right? You see the RSI went super, like this was even worse. The RSI really came down. Came back up, 50-day moving average, cross, golden cross, pulls into the golden cross, right? Finds support off the previous resistance, turns it into support, moves higher. Except for you got, it got overbought, and then that's a signal to like, hey, you're gonna sell a little bit. This is what I mean by overbought. And then today, not today, but like this time around, you get the same thing. Another reverse head and shoulders pattern, very oversold, very oversold. And now we're getting the golden cross. So I'm thinking Tesla. That's why I shorted it today. I'm not like, this is not any advice for anybody. It's just my opinion, but I shorted it today because the overall market's overextended also. I could be wrong. I just think the probability is in my favor. It could come back down, spike into that moving average, and then move higher. So that's kind of what I'm looking for here. Hopefully that answers your question. Nvidia earnings could be the catalyst to move the market higher or lower. 100%. I think Nvidia earnings are going to be bullish. I know people want to think the opposite all the time, but it's just look at Bollinger Bands. Yeah, a lot of people use Bollinger Bands. I think I had them. I just don't want to put too many things on my chart, but Bollinger Bands are pretty good. Bollinger Bands. Yeah, I'll add that. I had it for a while. I just took it off. We're moving to Liberman between Croatia and Siberia. Check it out. Okay, that's interesting. Gaps eventually get filled. Gaps don't always get filled. I just want to throw that out there. Gaps don't always get filled. Did I get in today on Tesla? No. I got in I got in Tesla a while ago. I got in Tesla here, here. Actually, no, I got in here, I got in here before the gap up, and then I think I finished it off about right here. And and I wanted to add on this day, but I was like, it just didn't show up as good as I wanted it to, so it's fine. So I'm just selling against it, but it's if I wasn't selling options, I would have been out. I would be out right here today. I would have been out today and just waited. Give me an example of a gap that hasn't got filled. Oh, bro. Is there really people that believe gaps never get filled? If that was the case, you know how easy it would be to trade and make money if gaps, um, if it were true that there are gaps that never got filled. See if we could find one on Tesla. I don't know how far back this thing goes. Let's go to SPY. See, I don't know if it goes this far back for the gaps. It doesn't seem like it does. I don't think it does. Let me see. Um, yeah, it doesn't go that far back. So there's examples. There's gaps back here. I could just look it up. So we'd have to look at some gaps back here. See if there's any gaps that never got filled. I wish this would just show up. Well, let's just go now. Let's just look today. Right? Because I can't really this doesn't go far back enough. Um 397 gap. I mean, do you think that's gonna get filled? 397? I'm sure there are other watch, let's go to Nvidia maybe. You could even go to Tesla. There's a gap down here. This never got filled at 146 for Tesla. Now remember, this thing doesn't go back in history as far, so I'm not gonna try to like mess with it right now. But this never I remember this too. I was actually gonna trade this gap reversal. Never got filled. It filled a little bit. They don't get fully filled. It'll attempt it, but it didn't get fully filled. I bet you Nvidia has gaps that never got filled. And then, some people are going to be like, well, yeah, that's why I'm shorting Nvidia because those gaps will have to get filled. Take this RSI off. How about this gap? Oh, it looked like that got filled. That gap got filled. Yep. I mean, yeah, there's gaps that don't get filled unless there's a crisis and then it comes all the way back down. But for the most part, gaps don't always have to get filled. Also, your timing around the gap matters. So it's not like you could just be like, "Oh, the gap's gonna get filled." You'd probably have to wait for that gap to actually get filled, but they do get filled most of the time. You think Nvidia comes back down to 425? Maybe. Tesla 325 minimum, 425 high for end of year due to Cybertruck bump. Okay, fair enough. BTC, XRP, Tesla. Tick Tom Toe. Why XRP? I think in the beginning stages of the stock, those gaps don't get filled. When they start going higher, they fill most of the time. Yeah, I would agree with that. They usually do fill. They usually do fill from week to week or month to month, but they don't always have to fill. Sometimes they get really close to filling and they just don't, right? I mean, for example, this gap hasn't got filled on Nvidia. It's just showing the gap. It didn't get filled. This one got filled. I was in a downturn. I feel like there's more gaps somewhere. I feel like there's more gaps we're not seeing. Yeah, but this is a good example right here. This Tesla gap didn't get filled. Got down to 152. Euro banks adopting XRP possible ETF once court is over. Oh, bro, you have a Tik Tom Toe. You have 1,000 followers. I'm gonna send you an invite. See if you want to talk about XRP. This isn't this the gaps indicator on TradingView? Do I have any courses? I'm actually working on a course, so just stay tuned. It'll be in my link in my bio. Working on a course. It'll be like reading the macro cycles, and there'll be a foundational stage, and you'll have found here. Look, I'll show you guys kind of the front quant network. I know a lot of people are looking at quant network. Here's what I'd say for Chainlink, because crypto is very hard to understand. I would say when it comes to Chainlink, go follow Chainlink God, because he talks about quant network and Fishy Catfish. They both talk about quant. They'll dispel everything about XRP, quant, and XRP, quant, and who's the other one? All these other L3s or whatever they're trying to be. So these guys talk about that in depth. These guys talk about that in depth. But dude, nothing compares to Chainlink. I'm telling you, they don't have the adoption Chainlink has. So right now, let's just talk about this. This guy said he XRP, right? Euro banks adopting XRP, possible ETF once court is over. I guess you could say possible ETF, but and the thing, Tigger Media, I'm not gonna talk about quant. I don't know enough about quant. I just don't. Um, I'm not gonna talk about something I don't understand as much. These are who's using Chainlink, right? The whole XRP stuff, what banks are using XRP. There's no evidence. As far as I understand, Tick Tom Toe, as far as I understand, maybe you could prove me wrong, tell me where to search. I'm open to it. Try to get you on the live. As far as I've seen, there is no actual evidence. It's all he say, she say for XRP. But here's your actual evidence: ANZ, PNP Paribus, BNY Mellon, DTC, Euroclear, Clearstream, Deutsche Group. So these are all literally using Chainlink, right? And this eliminates a bank from having to use XRP because they don't need to use the XRP ledger. They can get liquidity without using XRP. So that's why I think it just kills the XRP. And I know people get personal about this. They get hurt. I'm not trying to crush your dreams. I think XRP goes higher. It's the use case really just kind of fell off for XRP. Just use facts here. Oh, coin shortage for quant. Yeah, I don't know enough about quant. I worked for Chase. We were beta testing XRP transfers 2 years ago. I mean, beta transfers. A lot of people were using XRP to experiment, right? People are using it to experiment. They're trying different ledgers, but what I'm saying is there's no. What I'm saying is there's no like nobody coming out saying we are using the XRP ledger. I think there's a couple I saw in a Citibank paper that somebody was using XRP in another country, but it doesn't have as much adoption as Chainlink. That's the only point I'm making. Swift is not using XRP. Citibank is not, right? The biggest depository trust in America, biggest in the world actually. They do 2 quadrillion. Why have XRP? XRP is like a 30 billion market cap. Chainlink's like 9 billion. Why have a bigger coin with less use case and have a smaller coin nobody knows about, nobody even understands it yet, and it has a way bigger use case and it has way more evidence, right? Not trying to hurt your feelings. I'm just throwing out the facts. And you want to debate, we can go live. XRP, where's the evidence? So you say XRP is the most effective and they will run with it in Europe. Where's the evidence? Here's the evidence for Chainlink. Where's the evidence for XRP? Right? That's what I'm saying. Because you could say a bunch of stuff. They're doing this and they're doing that, but the actual evidence for it happening just doesn't seem to exist. And like I said, I'm open to being wrong. Maybe it does exist, but show me. I'm gonna use ChatGPT to see if there's any banks using XRP, any evidence. There are different use cases, room for many chains. Here's the thing too for Chainlink, they're going to eliminate, and I think the coin goes higher, the other coins go higher, but Chainlink eliminates all these other use cases. It just makes it easier, faster, more efficient. I need my brother to explain it. We sign NDAs, can't write an article on it. Well, no, no, no. I'm not saying for you to write it in, bro. That's an easy cop out. We signed an NDA. What I'm saying is send me an article or something like you're saying it's all. Here's the thing about the XRPers. There's no evidence, and instead of giving you evidence like this, say, oh, well, it's hidden. Nobody knows. Like, come on, man. And I'm not saying maybe you're right. Maybe you're right to some degree, but where is the evidence that other banks are using XRP, not experimenting with XRP because everything gets experimented with and it doesn't work, they don't use it. Who's adopting XRP? Where's the evidence of XRP adoption? I'm going to type this into ChatGPT. Oh, we sign NDAs. That's hilarious. Tesla 300. Yeah. The facts are secret. The ROI is secret. That's always sus, man. Everything is secretive. Like, why would it be secretive? And I'm not saying no banks are trying to use XRP at all. I'm just saying they don't have mass adoption by the big main players, right? The biggest players are like JP Morgan Chase, right? They're actually they have to use the CCIP network in order to tokenize assets. ChatGPT 4, no, the one I have is updated. Oh, you know what? Uh, I think what I'll do is I'm gonna read. Let's see, Chainlink got. I think he has some. Actually, let's go to Fishy Catfish. Bank de France. Okay, there you go. Bank de France, or Bank de France. All right, let's look that up. All right, so here's he said this bank is using XRP. France is exploring the use of Ripple's XRP for its digital euro. XRP is gaining attention in the gaming industry. Okay, Ripple has been shortlisted for a CBDC project by the National Bank of Georgia. The cryptocurrency market had a hectic week with rising. See, France's financial leap. Okay, so they've been trying to use experiment with it. Okay. I think too the big question is because this was fairly recent, right? This was fairly recent, October. Okay, there you go, Banque de France. Yeah, and I'm sure people are using XRP. What I'm saying is they don't have the big major players, right? Chainlink is not really competing with XRP. It's just what Chainlink is allowing for, XRP is no longer needed for most banks. So you're seeing the major like tokenization of real world assets. XRP has nothing to do with that. That whole narrative is cross chain interoperability. That also eliminates people from having to use the XRP ledgers. What my point is. So yeah, I think XRP goes higher, right? But a lot of people think it's the end all be all. XRP all in. It's just kind of false. You think Solana and Chainlink and AVAX are going up because they connected to Ethereum? All right, cool. All right, look, YouTube. I'm gonna get off YouTube. Appreciate you guys. I don't want to continue just streaming if I'm just talking to the TikTok people, but just keep in mind inflation is coming lower, right? Very good setup for end of the year rally. Inflation is coming lower. There's no recession in sight. I mean, you could say 2024, but yeah, it's Joe Biden. Joe Biden's probably going to step in, and maybe not him, but whoever handles him is going to start printing more money if something slows significantly. So year end rally, you're looking at other assets. You're looking at the best assets. I think Tesla outperforms the Mag 7 because it's been lagging. You have the Cybertruck coming in. You have margins starting to increase now. Meta looks good. Google looks pretty good to probably break out. A lot of these Mag 7s look pretty good. But yeah, I'm going to talk a little bit of crypto, a little bit about crypto on there. So you can jump over to TikTok if you want. I don't like sitting in a chair for too long. I'm gonna get out of this chair, and hopefully I can debate somebody on there. Anyways, yeah, we'll be back tomorrow. So there's no big macro data. I think it's just initial claims before I talk to you guys on there. The macro data for tomorrow. Let's go over this really quickly. It's gonna be early in the morning, and I think you could see if this data comes out stronger than expected. And the data coming out for tomorrow should be there's a lot of Fed speakers also. Cook 4 a.m. Fed bar. So you have a lot of speakers. They might try to talk down the market. I don't know if it'll work. We're a little overbought. They might get a little hawkish. They have no reason to be hawkish, but they might get a little hawkish. Full self driving supposed to be delivering to. Oh, that's right, FSD. That makes me want to hold them calls even longer. Initial jobless claims. Everybody's going to keep their eye on that to see if this thing keeps spiking. It's not really spiking a lot. It's just going up a little bit. It probably goes up and then tapers off. Uh, Fed business conditions, industrial production. We'll see how good the manufacturing sector is doing. The housing market index. This is going to be key. Is the housing? Are we going to get any kind of bump in housing expectations? They probably do. I think the housing market actually might start to recover here because rates have fallen, because the 30-year fell. Is it low enough to get it to get a sustained, rally? Probably not, but you have a lot of Fed speak and economic activity. Other than that, you guys stay blessed tonight. Get your workout in. And I'll be working on that course for you guys. All right. I'll be on TikTok. Catch you guys later. Stay blessed.